Hello Market Club members everywhere. Adam Hewison here coming to you from the digital studios of Market Club. It's Friday the 13th of November and we're starting off looking at a weekly chart of Apple. As you can see on our weekly chart we have a plus 55 indicating a trading range. Now what's noticeable this week more so than any other week is the fact that this is the week of Apple. If you look, we are down 6.7%. In fact, Apple closed last year at $110.51. We're very close to being unchanged for the year, which is almost unheard of for Apple. There's something not quite right with the stock. I'm not sure what it is yet. Maybe they're going to see a slowdown in iPhone sales. The iPad's not going to sell quite as well as they expected it to do. The watch hasn't really taken off. So maybe Apple is changing culture. Maybe it's not quite so cool anymore. Who knows? But the reality is the market's going to tell us this. The other thing to notice is the fact on the weekly we've tipped below the 50 line on the RSI. This is significant. It doesn't happen that often. And you can see last time it happened was right here. And we sort of stayed on the negative for quite some time until it just popped over briefly and then came back down. So again, I think you want to be very, very careful about holding Apple stock right now. Looking at gold, gold's a minus 85. The trend is down. You see we're below the RSI line and we have all of our trade triangles red. However, we're still kind of back to this area here. The level we saw here was 1,072.85. The lowest we've seen so far this week is 1,074. So we still have this sort of potential double bottom. We're looking for a cyclic low, as we talked about that before. So we may bounce around here for a little while, but let's see how that plays out. But again, gold is down for the week about, let's see, not even 1%, 1.73% for the week. So let's see how that looks next week. But again, it's minus 85. The trend is definitely down. Looking at the Dow, you can see this is a big Dow. Looking at the Dow, you can see it has a big week on the downside this week. It's down 3.39%, probably one of those biggest losing weeks. You have to go all the way back probably to this area here where we had a 5.8% loss for the week. So again, this is not a good sign for the Dow. We're just getting back to the 50 line, which should be support. Now we do see a 55 reading here indicating a trading range, so it's not clear cut, but we've talked about this before on the dailies, but just looking at the weeklies, we said we felt this is going to be a real problem for the market, and it's been proven to be correct. We've sort of gone sideways for the year, but the Dow is now down for the year. Last year, it closed at 17,823. We're 17,303. So we're down about 500 points for the year so far, and the year isn't over with yet. Same picture with the S&P 500 plus 55, a trading range. The S&P 500 is also down for the year, closing last year at 2,058 with 2,031. Not a big change, but again, this problem hangs over the market, much like Apple. This huge top that really is a lot of people were selling up here, couldn't get any higher, so that's a natural resistance area for this market. And we're just now touching the 50 line. If we close lower than this on the 50 line, it's an indication of further weakness. But again, it's a mixed bag. We have both our trade triangles up. I'd watch the weekly, this one right here, very closely next week. This could change really quickly, so be careful there. This is the Nasdaq. A little bit of a different picture here. It's at minus 75 because our monthly never did get positive on the Nasdaq, unlike the Dow and the S&P 500. So we're down for the week. We're down 3.57%. However, for the year, the Nasdaq is actually, we closed last year at 4,726, so it's up maybe about 200 points for the year. Not bad, but not great. The market has a sort of uneasiness to it, and I think that's what everyone's looking at right now. And again, we're getting very close to the weekly line on the RSI, the 50 line on the weekly charts. Looking at the euro, we were looking for the euro to go to the 107, 108 level. We certainly got there, and I would expect it's going to sort of stabilize a little bit, maybe around, may go lower, but nonetheless, it's down for the week, just barely unchanged for the week, but it's down for the year. We closed at 120 last at the end of 2014. Here we are at 107, so it's lost a lot of ground for the year, and the dollar has gone up considerably. So if you want to go to a nice vacation, go to Europe. Less expensive, let me put it that way, than it was a year ago. Crude oil, much the same picture. This does not look good. All of our trade triangles are green. We closed last year in crude oil at $60. It's barely over 40 right now, so it's lost a huge amount of value here, and it looks like it wants to continue going lower. I don't know what's going to stop this market, but we're down for the week. We're down 8.7%, a huge down week in crude oil, and we'll see how that translates. This will be the lowest close we've had on a weekly basis in, well, for a long time. So again, very oversold. You can see this market really never got over the 50 line ever. So you can see it just continues to be a negative trend for crude oil. This is looking at the spider gold shares at GLD. You can see we've sort of backed down to this area where it's found support. Whether it finds support here or not, we'll have to wait and see, but it's a minus 85. Trend is your friend. The trend is down right now. Now looking at Nordstrom, we talked about Nordstrom before. You can see how, looking at Nordstrom, you can see how it's had a huge down week this week, almost down 20% for the week, and you can see how our trade triangles really caught this market from 67.50. That was the last signal we had on this market. That was a weekly signal. The monthly kicked in all the way at 74.51. So again, we caught this big move down by being short the market based on our trade triangle technology. Bebe Stores, not such an active stock, but you can see this market's been under pressure for $3.10, and it continues now. It's trading at 54 cents. We don't usually report things, but this is to give you an idea of the retail sector. It just is not doing well, and I think that's the key thing to remember. JC Penney, on the other hand, closed last year at $6.50. It's actually up for the year 85 cents, which is hard to believe, but nonetheless, it does not look great. Weekly is down. The monthly is still hanging up there, but that could change quite dramatically, particularly if we take out the $7.20 level. We're very close to doing that. We could even do that today. So let's see what happens. But again, the retail sector is dragging down the entire economy as far as I can see, because retail is very important because obviously a lot of people work in that sector, and people just aren't spending the money, perhaps online, but not in the retail stores. This is Macy's. Again, we reported on this before. We had a big post on Macy's, why we thought it was going down. You can see the monthly kicks in right here at 62.80, and we had a weekly that came in at 47.10. So again, not a good sign. 39.41. We closed last year at Macy's $65.81. So you can see how much it's lost, a huge amount for the year, and it's not over with yet. Now, I promised to show you something like an indicator, a unique indicator, and this is what it is. I'm going to go to our Smart Scan technology, and what I want to share with you is this. Here we are. Look at the markets that are plus 100 right here. Okay, we have 200. That's strong upward trends. Look at the ones minus. We have over 1,000 that are in negative trends, strong downward trends. So you can see the dichotomy right there. You can also look here on long-term up right here, 343, long-term down, 455. So again, the long-term down has more than the long-term up. So again, that's why there's sort of back and forth. And you can also see the markets that made new highs, 4-week high, 199, over 1,000 made a new 4-week low. So again, these are things you can look at in Market Club with our Smart Scan technology, which is right here, and you can see just how it works to help you get a feel for the market overall. Of course, you can always use our trade triangles, which have done very well. I'm Adam Houston. Thanks for watching this video. I hope you enjoyed it, and I hope you have a great weekend. And remember, stay strong, stay disciplined in all your endeavors. I'll be back on Monday.